Welcome. It's another episode of the IBC Guys. I'm Dave. Excited to join you today. My cup is rather full. My wife and I, so my wife over the weekend got to meet another business couple um, from the area, and what they do is they own a farm and they have built a complex is the wrong word that makes it sound industrial, but essentially they have a call it a condo. They got a meeting space, like a conference room. They got different areas around the farm that they want people to come gather and connect. And my wife and I got to go just sit and be together this morning, drink some coffee, drink some tea, did our devotions, spent some time journaling. So it was just a great way to start the day. And then we got to run errands together. So it's a pretty cool day. Get to do this now. Um, but excited to be here with you doing this in terms of the podcast. And got an interesting topic today. So if you maybe read the title, I asked ChatGPT if it would do IBC. So it's not meant to rhyme. It kind of doesn't. But we'll get into that here in a second. But let me go through why the podcast exists. It exists for three reasons. First, it's to get as much information about IBC as possible out there. I think we say this every episode. We want to make sure people have the understanding as to what IBC is so they can then make the decision yes or no. Talking with somebody this past week and spent a lot of time, answering those questions, and they just said, I don't, it's not for us, and that's great. I'm just as happy to have people make that decision because I do feel like they have a thorough understanding of how IBC works, what it does, what its intentions are. And it just wasn't something they were ready to do. They had other things going on, and again, that's great. So if that's you, I makes me happy you're listening, and it makes me just as happy that IBC is not for you in this time. But the goal is to get the information out there. Two is to provide applicable, implementable examples. Today, I think we're going to bring some practicality. ChatGPT is going to give us a list of things to look at. So we'll get that here in a second. But my hope is this can be helpful. If you're thinking about IBC, um, the the non-entity that ChatGPT is, the bias, not or the unbiased third party onlooker. I don't know, just made that up. That ChatGPT is kind of give some practical ideas of how it would look at IBC. So we're gonna talk about that. I'm excited about it. But third is to get the information about IBC out there to as many people as we can. So if you would share, like, subscribe. My wife and I, for our land business as well as IBC, are going to try and jump into the social media world a bit further than we do already, which is really negligible at best right now. But hopefully you'll see a little more content, get to know me a little bit better. Hopefully get to know Jess. Jess is definitely my better half, but to get to know her better. But all that to say, if you would do all those things social media wise, it just helps spread the information out. So that'd be great. All right. Would Chat GPT do IBC? So if you're not familiar with Chat GPT, it is an artificial intelligence. It's one that we use. We do a lot of systems work in our business. So how to automate. So if something happens here, how does it automatically trigger this, which automatically triggers this? So rather than what would take us, a half a day to accomplish, if we were to do it, it just happens, in succession using ChatGPT to do that. It's really helped our business out quite a bit. It's really supported our team. It does some good things. So if you're not using ChatGPT, it's not just like Google where you just look up an answer. It can do things for you. So with that in mind, I did just ask it a question, but I do think it answered a little more intelligently than like a Google would. I will say, I have been working with ChatGPT, and its goal is to kind of learn you as the human. So it learns your tendencies, the questions, and things like that. So call it a bias. That would be the only bias in what this is. But I literally typed in, Chat GPT. If you were me, would you do or would you utilize the infinite banking concept? I think is the exact question I put in there. So I'm just going to kind of go down the response. I've been thinking about how do I get this actual response out. you're welcome to go ask the same question to ChatGPT. It might be worded slightly different than I put in there. But my hope is you come out with the same things. But again, this is I hopefully I've earned some trust in this podcast. This is what came out. So I want to talk about it. So it answers the initial question. Would you use IBC, the infinite banking concept? And it says, if I were a person living in the real world with a job, income, family goals, taxes to pay, etc., I would definitely look into IBC, but I wouldn't jump in blindly. So that's the exact quote from ChatGPT. And it does, give the reasons why. So the pros that attract me to the infinite banking concept. I like the idea of having a guaranteed growing cash value that is not tied to the stock market. So we've talked about that several times on this podcast. It's guaranteed, it's contractual. So I can show that to you if we were to come up with an illustration. It is contractually, here are the numbers. This is guaranteed what you will get. It's not tied to the fluctuations that exist in the stock market. So I often get questions, Dave, I can make more money in the stock market. And I often remind people this is not a mutually exclusive thing. This is not do IBC or go to the stock market. This is run the money you're going to invest in the stock market through your IBC and then go invest in the stock market. So I would encourage you to try and remember that. But the money that is run through the policy is guaranteed. It has guaranteed growth and it is not tied to the stock market. So let's say you lose all your money in the stock market, but you run it through your policy. That money is still on the ledger making dividends and interest, which is kind of a crazy concept, but it's absolutely accurate. So that's the first thing. The second point that attracts ChatGPT to IBC is being able to borrow against my own policy instead of going to the bank. That feels empowering. So again, if you build up your cash value, you have clue, control, liquidity, and usage of that money. It's still there making you an internal rate of return, dividends, and interest, but you can leverage that at any time. So opportunity often finds those that have the ability to jump on that said opportunity. So if an investment comes along or an opportunity you want to join a partnership or a joint venture or something like that, a JV, you have the ability to do that. So ChatGPT says it likes being able to borrow against its own policy instead of going to the bank and jumping through all their hoops of applying and all that kind of stuff. The third thing is the tax advantages. It says especially on loans and death benefits. They are appealing for long-term wealth building. So getting tax advantages, it's non-taxable. There's not a taxable event. We build the policies so they don't MEC, so they're not a modified endowment contract. So the government said, if you're putting in 20, if your death benefit is a certain amount, you can only put in like $20,000. So if your death benefit is $500,000, you can't pour in $10 million into your cash value. You can't do that. So there's a ceiling to it, but the more base and PUA you put in, the higher that death benefit goes, the higher the MEC limit goes. So again, that gets into the weeds of it all. But there are definitely tax advantages to this. Another one, looking at it from a liability standpoint, these policies are not tied to our LLC. So let's say something happens, someone gets injured on one of our properties, who knows? And they sue the company. These policies with my cash value in them are not tied to anything in terms of my LLC. So there's an advantage that it's not necessarily a tax advantage, but there's definitely an advantage there. We've done other things to shield our assets, but that is definitely one of them. The money that exists in there, the IRS cannot look at, it doesn't know of. So I have wealth, it's just not on the taxable books. I don't know if that's a good way to say that. But the fourth pro that attracts ChatGPT to IBC, it says the discipline that it enforces. I like this one. Funding a policy consistently can help build wealth. So this is something I definitely need to work on. Where my discipline lacks is, I've shared this several times. We'll take investor money, we'll run it through our policy, and then go buy land. Rather than take the money that we have made, so we buy and sell land. We sell land quite often, buy it quite often, just repeat that process. But rather than put my money back into the policy, repay my loans to minimize the drag, is what I call it. I have tended to, in the past, just go buy more land. I mean, take that money I've made, refresh, rather than throw it back into my policy and decrease the drag. So it's not a giant mistake. It my policies aren't as efficient as they could be over the course of the last couple of years, but it force discipline. Each year we have to have a certain amount of money set aside to go in. And am I saving for that? Am I spending less than I make? I mean, there's a lot of different things that go into that. I think Joe Pantozzi spent a lot of time. If you've heard, Joe was on the podcast a couple weeks ago or a couple episodes ago. He talked consistently about that, the discipline that it takes to do IBC. So ChatGPT is saying, hey, this is forcing me to do it, and it appreciates that. So the flip side, what concerns ChatGPT about IBC? I think these are just as valuable and very, very valid, to be quite honest. It's a long-term commitment. If my cash flow is inconsistent, the premiums could become a burden. So that is very true. Um, Often when I work with people, I like to have them pick one thing that they're paying anyway. Um, I love my favorite example in the recent weeks has been your homeowner's insurance. So let's say it's $1,000 a year. Unless your house burns down or you get a hailstorm or a tornado knocks a tree over or whatever, typically that money that you pay for your homeowner's insurance just goes to the insurance company and nothing's paid out. There's no claims made, nothing. But to run that money through a policy, $1,000 a year, then you go pay it over the course of 10 years. I mean, 10 times 1,000 is 10,000. I know that's not genius math, but you have $10,000 making you dividends and interest. So starting with something small is really good. But as people do that, they tend to want to do more and more and more because they realize what's happening. They're making money off money they're going to go spend already. But ChatGPT says, hey, pump the brakes. And I agree wholeheartedly with this. It is a long-term commitment. One, this is not a get-rich-quick scheme. Never has been. Hopefully, you've never gotten that impression from the things Mike and I have talked about. But it does take consistent discipline to ensure that your money is growing. So if your cash flow is inconsistent, let's say one month you get $50,000 coming in for your business, and the next month you got $10,000. I would err on the side of let's go lower. Let's maybe go 8, and let's do $8,000 a month. You think you can run through? And I'm just throwing numbers out here, but hopefully you can understand what I'm getting at. Start with something you virtually can guarantee you can fund. Then, as that builds up, as you fill that pool of money up, that bank, if you want to start another one, you can do that. I mean, that's what we have done. But if the cash flow is inconsistent, it can be a bit burdensome. So to start small, learn how to use it, learn how to leverage it, and then build your bank is the recommendation. So it is a long-term commitment. So that's the first concern from ChatGPT. The second one, it says the first few years can be cash value light. So patience is key. So we've shared several times in this podcast as well. The first year, the healthiest split, in my opinion, is a 60-40 split. And you don't necessarily need to know what those numbers mean right now. But what it does mean is the base is 40% and the PUA 60%. So the first year, if you put $1,000 in, only 60% of that $1,000 is usable in that first year. So $600. So that can be difficult. You get people that get excited about this. Well, I want to run every dime that comes through my household through these things. I love the enthusiasm, but the realistic nature of that is, excuse me, not really there. Most people can't afford to take 40% of their finances and not use them. So ChatGPT, again, the first few years can be cash value light. So the splits can be different. You can make them 50-50. You can make them 70-30. You can go as skinny often as 80-20. Depends on what you want to do with it. But it can be cash value light because the base drives the growth of the policy. So you want that base to be healthy, but at the same time, you want to be able to leverage as much cash as you can in that first year. So that's the discussion I would have with you. But ChatGPT very astutely said it can be cash value light that first year. So that is something to take into consideration. The biggest hurdle in these things is that first year. All right, the third concern ChatGPT puts out, it says the policy design and the insurer matter a lot. If done poorly, the policy may not perform as intended. So that's where my hope is that this podcast hopes bring credibility. My hope is if I get a chance to talk to you, I could show you why I do what I do. I have seen people be burned by others that maybe had commission as their intent in building a policy rather than the client. So it's my value. I'm shaking my head. I'm thinking of the beating, the butt kicking I would get from Mike if I ever did anything that wasn't in the best intent of the client. Um, so my ability to work with people is solely because of Mike Stevens and the path he's trod already and getting his agency and things like that. But if he ever learned that I did not have the client's best interest at heart, I'm a little scared of what would happen. So I say that not because Mike's a big mean bully, but because he has made me promise, and I continue to um, ensure that trust of him in me. That was a weird way to say that. I'm going to continue to do what's best for the client all the days of my life. If you ever heard that old Bible song, but I want the client. I want this to impact. I kind of a kingdom mindset. I want this to impact people for a long time, and I would much rather have that than to make a couple extra $100 that I have seen maybe happen with some other people that have written what they would consider IBC policies. I necessarily wouldn't because it's written for the agent and their commission rather than the client. But you need to be careful. So again, ChatGPT says, be careful of the policy design and the insurer. They matter a lot. If done poorly, the policy may not perform as intended. So that's where asking questions, where hopefully this podcast comes in. You feel like you're informed enough to ask the correct questions, but also where that trust comes in. And my hope is I've built it over the context of this podcast as well as asking questions, and we would build that if I ever had a chance to talk with you. All right, fourth concern. It says IBC is not a magic bullet. If I had a high interest debt or no emergency savings, I would address those first. So ChatGPT is saying high interest debt, credit cards, student loans. I mean, I'm just depending on how high the interest rate is, it would get rid of those before starting a policy. And if there were no emergency savings, it says I would address those first. So I'll do those first, which I think is fair. I mean, um, I guess I don't necessarily disagree with that. I think there are other ways you can leverage those things. Um, but that's ChatGPT's opinion, and I certainly can't disagree with it. I think we can get creative in those areas, but I think it's pretty sound advice. So, what kind of excited me about all this? Well, let me read this. Let me back up. So I'll tell you why I'm excited here. I promise I won't miss it. So ChatGPT then says, so if I were financially stable with a long-term mindset, I'd certainly do IBC, but only through a well-designed policy with a trustworthy advisor who understands both the product and the strategy. So my hope is that I can be that person. If not me, Mike is certainly that person. But again, we say it, if you don't want these two chuckleheads working with you, we know lots of other people, and there's so many good people doing this that we know. You'd connect with one of them and do a policy. I would much rather you have a policy, just in general than to necessarily do it with me. So we'd be happy to connect you. I had a female client. It just we were working, and then just something hit me. It's like I'd like to pull in another female to see what would happen. So I asked Yvonne Burke, who was just recently on, hey, can you come help me? And the two ladies clicked. And I'm at those meetings, but it's like I'm not there, which is great. So this person and Yvonne, they're chatting away, and how can I leverage this? And there's just a greater connection there, and I think that's normal for human nature. But that's an example. I'd love to introduce you to someone. If the ding dongs, Mike and Dave, don't work, let us know. There's going to be no hard feelings by any means. We want you to have a policy, and we'll introduce you to somebody that hopefully you can connect with and get a policy going for you. Yeah, jumping in. So those are the concerns. what ChatGPT did for IBC is it built a checklist, which I think is really, really cool. And I'm curious how I'm going to leverage this into something else. Maybe it's a document I can put out there. I don't know. But it says, should you do the IBC? So it's a question. Should you do IBC? Question mark. Checklist is how it has it phrased from ChatGPT. So I'm going to read through these. And it gives it's not a Likert scale. That's a rating. It's like if you have 0 to 5 points, don't do it. If you have 6 to 10 points, do this kind of thing at the end. And I'll read that. But it has a checklist. And under each of these categories, it has 5 things to consider, to think about. So the first category is the foundational readiness. So what's your understanding? What's your foundation in IBC? So I'm going to read these real quick. The first one is I have a steady and predictable income. That's the first thing that needs to be had for your foundational readiness. The second one, I can comfortably save at least 10 to 20% of my income each month. So that's the second thing. The third thing, I already have 3 to 6 months of emergency savings. So kind of ChatGPT kind of addressed that already in what we've already talked about. You need to have that predictable income as well as the emergency savings. But the fourth thing, it says I have little or no high interest debt. So again, already addressed that. And the fifth thing in the foundational readiness category is I understand that infinite banking is a long-term system, not a quick return or investment. So if you can check those off, you're off to a great start. Your foundation is solid. It's ready to go. Again, according to ChatGPT. All right, the second category is understanding the concept. Do you understand the infinite banking concept? So number one, I know that an IBC policy is a specially designed whole life insurance policy, and it's not a typical whole life insurance policy. So that's probably one of Mike's favorite phrases. It's a specially designed whole life insurance policy. These are designed specifically to do it. In fact, when I go back to the insurance agent to get like underwriting done and all that kind of stuff, as the agent, I have to say, this is an IBC policy. So look at it from that lens to show it's done correctly, to show we got all the pieces in place. It's a specially designed whole life insurance policy. So that's number one from ChatGPT. Number two, and understand the concept. I understand that cash value growth is guaranteed, but it's slow in the early years. 100% correct. You can take your money and make more money elsewhere, but this is contractually guaranteed. And again, I would remind listeners, so hopefully that's you, I would remind you that this is not an and or excuse me, it's not a mutually exclusive thing. It's not this or this. It's an and. In other words, put it in your policy and then go do with it what you were going to do. But the growth is guaranteed. It's guaranteed, but it's slow in the first year. But as it grows uninterrupted with that exponential growth, if you understand your mathematic graph, go back to your X and Y axis, exponential growth, there's a certain point it starts to kind of what I call hockey stick, and that thing starts to jump up because it compounds over time. So if you give this thing time, it makes you a dramatic amount of money for your discipline over the course of several years. But that's the second thing, understanding the concept. The third point in understanding the concept, I'm clear that loans are not withdrawals. I'm borrowing against my cash value. That goes back to the whole mentality of uninterrupted growth. You're not borrowing. So most people understand a savings account. You put money in, if you're going to use it, let's say you put $1,000 in, if you use $500, what's in your savings account goes down to $500. That is not the case with IBC. If you put $1,000 in, your $1,000 stays there, making you a guaranteed internal return as well as dividends and interest. And if you want to leverage $500, you borrow against the money you've put in. Essentially, the collateral then is not your $1,000. The collateral is the death benefit because in the contract, that's guaranteed to be paid out when you die or when the insured dies. So if the collateral is the death benefit, they will loan you against the money you've put into your policy. That's the ceiling. So if I put $1,000 in, I can't borrow $10,000. I can only borrow up to $1,000. Down the road. But back to my point, you're not taking any money off the ledger. That $1,000 is making you dividends and interest forever. You can leverage that money though because your collateral is a death benefit, and you can take it out, go use it, put it back in. You use it as a bank, but that money, that $1,000, stays on the ledger, making you dividends and interest forever for the life of the policy. I shouldn't say forever, for as long as the insured is alive, that will be making you money. So it's not a withdrawal. You're borrowing against your cash value. All right, number 4, understanding the concept. I'm going too slowly through these. It says, I grasp the idea of recapturing interest I'd otherwise pay to the banks. So you're that whole time, so you put $1,000 in, that whole time, that $1,000 is making you interest. It's making money on your money, even though you can go use it to do what you were going to do anyway. So that's foundational to understand the concept. And lastly, number 5, ChatGPT says, I'm comfortable using life insurance. Excuse me, I'm comfortable using a life insurance company as my personal bank, which is that's a kind of a broader statement, but it encompasses the ideology of the infinite banking concept. All right. Number 3, third category. There's 5 total. So this is the third one, the financial alignment. So the first point in the financial alignment, ChatGPT, are you ready for IBC? In under financial alignment, the first point is I'm already saving or investing money somewhere. Okay, so 401k, brokerage, real estate, etc. The second one, it says I want more control and liquidity over my capital. In fact, I just went and golfed with a buddy on Friday. Got to play 18 holes. He just has recently retired. We were talking business, money stuff, and we were talking about what Justin and I were doing in the land business, other investments we've done, things he's doing, and I kept coming back to he was hamstrung. He's done all the things that he's been told to do. His 401k, he's got a pension, mutual funds, but he's hamstrung. He does not have the control, liquidity, and usage of his money to make more money. He's at the mercy of all these institutions. I don't want that for my family. And I kind of said the same thing to him. It certainly wasn't to be mean, but like I can go do when an opportunity comes, I have the money. 2 days, it's ready to go. So if you want to get into IBC under the financial alignment, you are desiring more control, liquidity over your capital, which again is a beautiful thing. So number 3, ChatGPT under financial alignment, are you ready to use IBC? It says, I like the idea of earning uninterrupted compounding growth, even while using my money. I couldn't have said it better myself. So again, if you put money in, it's uninterrupted exponential growth, even though you get to go leverage your money and go do with what you were going to do anyway. It seems too good to be true. ChatGPT is telling you it's not. It's a beautiful thing. All right, number 4. I want to build a legacy or intergenerational wealth plan. Again, my kids have policies. When these kids, I say these kids, when my wonderful children get access through the trust that we've set up to these policies, they're going to be making a substantial amount of money each year. So we've set it up. They can't touch the policy itself. The policies are on them. So they're going to last until they die. So my kids, each one of my respective children. But they get the cash value. They will be allowed to use that. But it will be in the tens of thousands, if not hundreds of thousands of dollars by the time, either they get to be of age, forget what age we put in, or when we die. So I'll have control over it until I pass away. When I pass away, the trust then controls it, and my kids can have access to it. But then when they pass away, my grandkids are the beneficiaries of that, or will be based on the trust, how it's set up. So the death benefit then that is guaranteed with that, which will probably be in the millions of dollars, will then go to the trust and then be allocated to my kids. Is how we have it set up. So talk about intergenerational wealth plan, a legacy wealth plan. It gets me really, really excited talking about that. So ChatGPT identifies it as something that you need to be ready and willing to work through. I don't think there's too many people that don't like that idea, but it is something to consider. So finally, the fifth one in the financial alignment, I prefer stability and guarantees to market volatility. Easy for me to say. So if you like the ups and downs of the stock market, playing stock market, I would encourage you run it through your policy and then go do that. If you like to have your money guaranteed, here's the contract. I can show you there is some growth that exists there, tier 1 assets, but I can guarantee this is what it's going to look like in year 29 or whatever. That this is IBC. So it guarantees stability rather than the volatility of the stock market. All right, commitment level. I'm going to go through these quicker. So ChatGPT says, I can commit to funding my policies for at least 7 to 10 years. So 4 is the minimum that we do. 7 to 10 is healthy. So that's spot on. The second one, I'm okay with less access to cash in the first 2 to 4 years as the policy builds. So again, going through the numbers, typically the first year you only get to use 60% of the funds you've put in. So again, $1,000, that's $600. The second year is around 90%. So if you put 1,000 in the second year, you get to use $900. The third year is around 98%. So if you put $1,000 in, you can use $980. And then the fourth year is typically when you get more money than what you put in. So if I put in 1,000, I get like 104% out. So it'd be like $1,040. That all varies based on three things: gender, age, and health rating. So those aren't exact numbers, but it'll be around there. But ChatGPT, again, is spot on. Within the first 2 to 4 years, as the policy builds on itself, the cash value isn't exactly 100%. Fourth year, it's a little higher. But then if you look at the illustrations, fifth year, sixth year, seventh year, eighth year, it starts to hockey stick. And as soon as you put $1 in, you get to the point where you get $3 to $4 back. So I put $1,000 in. The next couple of days, I have $3,000 to $4,000 in cash value I can go leverage. So I can go use it. It's my money to use by putting $1,000 in. Now that's probably 15 to 20 years down the road based on how efficient your policy has been. But it is there. So the third one, commitment level. I'd rather own my financial system than outsource it to traditional banks. So again, we talk about that quite a bit. I think banks are a scam. I use them. My business runs through them. I keep very little money in it. So it looks like my business is very poor. I have money in several other places that the IRS cannot look at. But traditional banks, if you like the idea of getting out of them like I do, IBC is for you. So I'd rather own my financial system than outsource it to traditional banks. Is what ChatGPT says. All right, number 4. I'm open, to learning how policy loans, repayment, and cash flow strategies work. That's where Mike and I come in. The fun for us is the strategy after a policy exists. Okay, we got a policy, great. We've gone through all the minutia of getting a policy, the necessary evils. Let's get to the good part. How do we strategize? How do we leverage? What does this look like in 5 years? All that kind of stuff. If you're open to learning that, Mike and I would be happy to talk with you. Again, if you don't want us to do that, we'll introduce you to somebody that does. If you've listened in the past few weeks, Joe and Yvonne couldn't be bigger experts in this area. They'd be happy to help you as well. So let us know. Be happy to connect you. Number 5 says, I see this as part of a lifelong wealth system, not a one-time transaction. 100% agree. You're signing on for the long haul. It's not necessarily marriage, but this is a lifelong endeavor. But if you stick it out, you have the discipline to do it, it will reap benefits that most people don't have access to. So a little bit of work on the front end, a little bit of discipline consistently over time reaps or yields some big benefits. So not a one-time transaction, it's a lifelong wealth system. All right, lastly, professional support. It says I have or will find a qualified IBC practitioner who designs policies correctly. I'd like to say that's Mike and I. We've been doing this Mike's been doing this for a long time, me not so much, but I've learned from one of the best. And this past year since I've started, so I started in January, done a lot of policies, more than I expected. We'll put it that way. So I've learned a whole lot, had to ask a whole lot of questions, but the beauty in this is I take it right to Mike. If Mike doesn't know, he's calling vice presidents of companies and things like that. So, we can get you what you need. It's not a matter of can IBC fit, it's how. So to figure out with you, to partner with you and how it does fit what you want it to do is a beautiful thing as well. But it does need to be correctly designed. It needs to be designed with the client in mind, not the agent. And that's my promise to you. It will be done that way. So I'll work with someone who educates first, sells second. I forgot that was in here. That resonates with me. I'm a former educator. I don't like to be called an insurance salesman, even though that's technically what I am. I'm licensed to do that. But I want to educate first. That's my passion. Always has been. I'm just doing it in this area now. Educate first, sell second. Beautifully stated. Fourth thing, ChatGPT says, I understand the insurance company choice and policy design make all the difference. We only work with the best companies. There are companies we will not work with. So if you come in with the idea of working with a respective company, in fact, I just had a text this morning. Someone wanted to know about this company and working with them. They don't recognize IBC. They don't allow the money to be moved in and out as fluid as we would like. Things like that. There's a checklist of about 7 things that we make sure, and there's 4 main companies that we use. There's 2 that I typically write for because the policies are most efficient. So 4 that we could use, 2 that I typically write for, 1 mostly because I tend to work with the younger people. And this particular company works best for younger people. So we have a longer amount of time. The money grows very well over the course of that time. So to understand the insurance company choice and policy design make all the difference. Lastly, it says I'm ready to ask questions until I fully understand the moving parts. That's, again, ChatGPT for the win. I'm ready to ask questions until I fully understand. So if it took me a long time. It took me about 6 months. Maybe it was a year. I think Mike was 6 months. Other people have done it a lot faster. Still working with people that's been since January. So what, 10 months? It's the natural progression. You're learning at your own pace. But to ask questions until you fully understand is absolutely what I would want. And again, it's the goal of this podcast is to provide the information to maybe proactively answer questions that you did not know to ask. But as you get that repertoire of questions under your belt, it hopefully breeds more questions. Let's get those asked and make sure that you understand before you jump in. So from there, ChatGPT says if you have 0 to 11 checks, you need to learn more. In other words, if you agree with 11, from 0 to 11 of those things, you're probably not ready. From 12 to 19, you're close. It says strengthen your cash flow or emergency fund first and then revisit, because that my guess is where the crux is, the breaking point. And if you have 20 plus checks, it says you're ready. You understand the philosophy and have the financial base to make IBC work for you. And that's just it. IBC is intended to work for you. It doesn't work for the agent. The agent doesn't work for IBC. IBC is designed and built to help the client. First and foremost, that's the goal. So hopefully, as you continue to understand that is something that resonates with you. So I thought of an interesting thing. Again, I just typed in the question, ChatGPT, would you use IBC? And it gave me all this stuff. I thought it was cool. So I figured I'd share it with you. I'm going to see how I can get the list out. So go type it in if you want to yourself. You'll get the same thing. Again, I just typed in a generic one. My only concern is I've typed in other IBC questions initially. So I don't know if it's learned from my questioning prior. So that would be the only potential bias I could think of. My hope is this is an unbiased opinion. I typed it in the question as innocuous as I could, but that's what ChatGPT spit out at me, and I thought it had some great points, and I wanted to share them with you. So I didn't do any of the phone numbers and stuff. So if I don't remember what our phone number is, I don't have it pulled up. I'm infamous for not remembering. We have a phone number. It's in the show notes. If you want to email us I'm Dave at familybankingsolutions.com. Mike is Mike at familybankingsolutions.com. I'm headed out to Mike's house this week. We're going to do some fun activities, some cool stuff. My kids are coming with us. My wife's coming. So hopefully we can maybe get him on the podcast again here soon. So I hope you have a great day. Thanks for listening. And we'll catch you on. I got a good one for the next episode. Hope to catch you on the next one. Easy for me to say. We'll sign off on that one. See ya.